Hi there, Robert Wolf here with Terra from a Business and Financial Consultants. I'm an asset coach and tax strategist. And so this video today is going to be talking about all the changes that are happening. We're having conversations with hundreds of clients, business owners. We have advisors that we work with all over the country, whether they're financial advisors, tax advisors, insurance advisors, anybody who really works with a closely held or small business owner. Here's the reality of what's going on in today's situation. Okay, we're going to talk about the proposed tax law changes. We've already done a couple videos breaking down some of the information that's being proposed. We're going to talk about the increase in audit teams. We've already done a few videos on that. And we're going to highly encourage you as a business owner to look at doing certain steps to be compliant and be proactive and prepared for these changes that are going to occur. As a small business owner, closely held business owner, you are on the verge of being attacked. This is not a scare tactic. This is reality. Look at the news. Look at the rhetoric. Look at what they're saying. Check out our videos on YouTube and see what we are talking about with the articles that are coming out. There is a pitting against business owners and employees to each other. And you, at the end of the day, are responsible for what the business owners are going to have to do. It's your business. This is your blood, sweat, and tears. I'm a business owner just like you. I have multiple businesses in different industries, and what is being said right now scares the living daylights out of me. But how do you combat that? Being proactive. Have a plan. And have advisors, have a team that can help you. If you don't have advisors that aren't helping you right now, that you're not looking at this video going, oh yeah, my team's good. After this video, you need to start looking at a new team or encouraging your team to reach out to other people to help fill in the gaps that they're missing or creating. Here is the basics of our business. As Terra Firma Business and Financial Consultants, we focus on a few things. The first thing is I wrote a book called Economic Termites. This book focuses on 4 of the 5 economic termites: taxes, inflation, time, laws and regulations, and what's not in the book is debt. Okay? Of these 5 termites, these are detrimental to the building and sustaining of your wealth. Of these 5, the most severe is laws and regulations. Our politicians, and that's what we're going to talk about today. They affect all the other economic termites we have. Taxes, which we're going to talk about today. Inflation, which is because of taxes and all the things that they've done over the last 18 to 24 months. Time, how do you recoup the time of the money you're going to lose with higher taxes, with higher costs, inflation of doing business? Okay, you're going to have to take on more debt just to stay competitive with your competitors. How are you going to handle that with inflation and interest rates maybe being lower, maybe going up higher? What are we going to do? Your politicians, our politicians, laws and regulations are affecting this. And so this is extremely important for us to heed this warning. Okay, so if you're watching this video, continue to watch and be mindful of what this means to your business. I'm going to minimize my screen here, okay? And I'm going to go through some of the things that we're talking about. All right, first thing I want to focus on is the issue when you go into Google and you type in proposed tax law changes 2021. Right off the bat, the tax proposal of Biden changes. House Democrats, this is CNBC, right? Typically a liberal media, proposed tax increases of $3.5 trillion budget. And it talks about, this is at September 13th. Okay, so this is recent, right? This isn't pie in the sky. We have House Senate advance President Biden's far-reaching, okay? What are we talking about here? How are they going to pay for these? A lot of these proposed tax law changes are you. Go check out our video. We're not going to go through all the changes that are being proposed. We already did another video on that. It's extremely important. We'll put it as a link down in the description so you have access to it. New York Times, proposed tax changes focus on the wealthy. Okay? What's considered wealthy? Right? That's a different definition, but they're defining this for you and I. Okay? And they're dictating in different areas, and we're going to talk about some of that today. Tax changes in key amounts for 2021 tax year. U.S. House Democrats seek to roll back Trump tax cuts. Ways and Means release lists of tax provisions. I don't need to keep going, do I? You get the point. You get the idea. There's plenty of information out there. You can go read for yourself. Okay? Talk to your CPA. Talk to your tax professionals. Now, if we go and Google IRS audit increase 2021, right on the very top, IRS audits may increase in 2021 and beyond. Why is that? Well, Biden's $80 billion plan to boost IRS audits may target small business owners. What's considered a small business owner? You, if you're watching this. Now, there's a bunch of websites and information on how to combat this, what you can do, what kind of deductions, all this kind of stuff. But at the end of the day, we are going to talk about something that's extremely important. And why is this important? Because what I want to show you is, I want to show you something. This is from the IRS, okay? The IRS has a document, okay? And it says it right here, okay? So it says Internal Revenue Service Data Book 2020, okay? This is a book. It's a 96 pages. You can see down here on the bottom, 96 pages of information data that they take in and they put into a book and give us access to it, okay? So page 19 of 96, I've added some things here. But table 3, number of returns and other forms filed, okay, by state for the fiscal year 2020. All right. Now, this is extremely important to understand. It lists out the states, okay, so alphabetically, the total returns, okay, these aren't dollar amounts, these are the number of tax returns, number of C corporation or other corporate income tax, so 1.8 million in the United States. S corporations, if you're a small business owner, S corporation, you need to focus on this right now, 5 million, okay? Partnerships, same thing. These are both pass-through entities, okay? 4.4 million. Now, if you're an LLC, taxed as a single member, okay, meaning your Schedule C on your 1040, you're going to fall into this category. Okay. Now, the Schedule C is the #1 audited schedule of the 1040. Why? Because of the situation of you're kind of a business owner, but you're not really. All right. And you fall into, as an LLC, you develop, and we're going to talk about this. Why do you set up a business entity? Okay. Is for 2 reasons: tax reduction, tax benefits, as well as corporate veil, separating your personal liability from your business asset liability. Okay? Now, if you're filing a Schedule C, guess what you're doing? You're taking personal liability of your business assets. It's going on your 1040 under Schedule C. Okay? Now, this is important. What we're going to talk about is how do you stay compliant based on those 2 things of reasons why you set up a business entity. Tax benefits, and then asset protection from a corporate personal liability standpoint, okay? Now, what are all these numbers? Well, if you look up here, right here, business entities, there's 11 million. These highlighted, we add all these up, there's 11 million business entities, okay? Now, again, that's not including the LLCs that fall into the category of single member, okay? Now, of these, the S Corp and a partnership, these numbers, 44.5, 39.4, are the percentages of the 11 million. Okay? When you add these up, that's 83.9% of the 11 million are pass-throughs. What's that mean? That means you're a business entity, and the profit and loss of that business entity flows down to you in your 1040 on your tax return. Okay? A C Corp has its own separate tax return and tax rate, which is part of what Biden's plan is talking about increasing as well. Not just personal tax liability, but corporate tax liability. So when you hear corporate taxes, we're talking about C corporation. Okay? This video is specifically going to talk about how do we stay compliant and protect ourselves and be proactive. Okay? I am tired of hearing business owners saying, well, I've done this for this long. Yeah, I'm just going to keep doing it. Well, guess what, my friend? We're in a different time. Wake up. Do not put all your hard work, all your energy, all your sacrifices on the line because, hey, this is what I've always done. Why would I change? Then you deserve, with that attitude, you deserve what is going to happen when all these changes occur. We're still in the first 9 months of Biden's administration. We still have 3 full years. Okay? So look at everything that's occurred this year and changes that have occurred this year. And where are they targeting? You, the business owner. Now they're calling you the wealthy, but when they're changing taxation for you, the business owner, they're combining you as one and the same. Okay? So this is very important. Now, one of the things we want to focus on is understanding that, hey, as a business, as a C Corp, S Corp, or a partnership, you do file a separate business entity tax form. Okay? So the C Corp is 1120, the S Corp is 1120S, and the partnership is a 1065. Now, if you're an LLC as a single member, remember, that's going to flow down to your Schedule C. I highly recommend, if you're an LLC, that you figure out a way to get your LLC off the Schedule C. Talk to your tax professional, see if you can go for an S Corp election, C Corp, or partnership, okay? Some way to get off the Schedule C, okay? It's the most audited. Why? Well, look at it. It's the higher percentage there, okay? But what I want to talk about, what I want to focus on here is understanding, just like when you have a car, which cars get the most speeding tickets? Not red cars, white cars. Why? Because there's so many of them. There's just more numbers of white cars, so obviously the percentage is going to be, or the number of tickets are going to be greater, okay? Same thing here, but a lot of the changes that are going to occur here is tax teams auditing what? Small business owners. Schedule the 1120S, the S Corp. And I'm going to talk about why, okay? IRS expected to audit more small businesses, okay? This is CPA Practice Advisor, okay? Why are they going to do that? Part of the S Corp, okay? I'm going to put my picture up here. Part of the responsibility as an S corporation is to take what the IRS considers reasonable compensation, okay? And what they mean by reasonable compensation, and check out our video on reasonable compensation, is you're going to calculate what wages you should take. Wages are W-2 wages. Now, why is this important? Think about it. What taxes come out of wages? Social Security and Medicare, 2 of the largest budget items every year. Every presidential election, every election, what are they talking about? Social Security, Medicare. They're always underfunded, okay? Where do those fundings come from? W-2 wages. So as an S Corp, your current tax professionals lower your W-2 wages so you don't pay as much in taxes. We're talking about a 15% when you take the business share and your personal share. We're talking about 15%, okay? That's the total taxation of Social Security and Medicare. Business owner and the business share expense, okay? So we're talking about lowering your W-2 wages to save 15% taxes on that lowered wage amount. And the Social Security threshold is $142,800 this year, okay? So, but here's my question. What methodology, what calculation are you using to prove why you're receiving that W-2 wage? You cannot use, well, my CPA says this. That doesn't fly. Why does that not fly? Because if you look at your tax returns where you sign, right above that, that says you agree with everything in all the information and calculations in this tax return, and you perjure yourself. Okay, it's a contract. It's a binding contract. Okay, your CPA doesn't sign it. You sign it. It's your tax return. It's your financial statement you're sending to the IRS saying, here's our financial situation as an asset of the government. Why are we an asset of the government? Because we create income, tax revenue for the government. Okay, just like your business creates revenue, income for you, right? Therefore, it's an asset. You are an asset as well, just for the government. Okay? It's very basic. Very, very simple to understand this. So if you as a business owner are going to be paying higher taxes, okay, shouldn't you have your compensation calculated using a methodology that's proven, such as labor statistics, census data, what is normal in your county and state? Absolutely. Is your CPA doing that? Majority of the time, the answer is no. Okay, so we want to be able to help you be proactive. If you ever get audited and the IRS agent says, well, you know what, I noticed that you're taking $48,000 of income, W-2 wages, but I noticed you have $300,000 profit. How did you calculate this income number, this W-2 wages income number? What are you going to say? My CPA told me. Okay, great. Can you show me the methodology of the calculation that they used to show this? Because at the end of the day, you're signing the tax return, right? And you call your CPA and say, hey, can you send me the calculation and show the methodology of how you calculated my W-2 wages? The IRS auditor wants to know. You need a blank stare. Well, we don't have that. Well, then Mr. CPA, Mrs. CPA, how did you calculate it? Gut feeling? Is that going to fly, right? You need to be proactive, Mr. Business Owner. This is extremely important. Mrs. Business Owner, be proactive. Okay? You're responsible for your tax return, not your CPA. You are. You're the taxpayer. Okay? So, that's why we're here to help you. Not to shame you, but to help you. Encourage you. Have proof and documentation. If you bring out a report that says, oh, good question, Mr. IRS Auditor, here's our report that shows based on historical data on labor statistics, census data in our local county and state of what the duties that I do as a business owner, not just a business owner, but you do multiple tasks in your business. Each of those have a different rate class, cost of what you would hire someone to do, right? Yes. And the time you do all those things, those are all part of your compensation. So here's a methodology. Here's what I should be taking. This is how I'm proving what I'm doing. Okay, great, thanks. All the IRS auditor is looking for proof of why you're doing what you're doing. What decisions are you making and why are you making those decisions? Okay? They're just verifying. It's an audit. They're verifying information. You've given them information, you signed the documentation, the tax return, and you have said you agree with all this information. All they're doing is saying, okay, we'd like to verify that. Now, I'm not saying that some of these IRS audit agents don't have a chip on their shoulder. I'm not saying that at all. All I'm saying is that the key reason is verification, which is why Biden is increasing the audit numbers, audit teams for the IRS, is to go out and verify more of the S corporations because we're not taking reasonable compensation, which means Social Security and Medicare are underfunded because we're not helping putting in. Yes, we are having other employees, but what about our share? All you got to do is prove why your share is what your share. Okay, that's the first thing. So we want to make sure that's important. We have a program that provides that for you and that methodology and calculation. Okay, now the second thing we need to be cognizant of is what I talked about previously is the separation of your business assets from your personal assets. Why you set a business entity. Now in the IRS's mindset is that when you set up a business entity, you're serious. It's no longer a hobby. Schedule C typically is a hobby type business. Now, if you're filing an 1120 C Corp, 1120 S Corp, a 1065 partnership, the IRS is saying, oh, these guys are serious. Here's a separate tax form to file for your business to show us what your profit and or loss is. Now, your S Corp, and partnership do flow down from those returns to your personal 1040, okay, and gets added to your individual tax rate. Yes, absolutely. It's very important. Okay? Your C Corp does not. It has its own tax rate. Now, here's why this is important. Okay? When you set up a business entity, you're separating a persona. Your business has its own persona. It's a separate entity. It has a separate tax ID number. So from the IRS's perspective, it is a separate persona, which is why it's separating personal and business liabilities. Okay? Now your requirement is to do what? Keep records. financial records, which is what your books, financial books, right? Your QuickBooks or whatever accounting you use with a bookkeeper or CPA or whatever. What's the other thing you need to do? Corporate minutes. You need to be setting up separate corporate minutes. Your minutes need to be documented. What actions are your business taking? Now, let's take a step back. Why do I need to do this? Because if your business is a separate persona, your voice as the owner, individual taxpayer, is not the same voice as the business. It has a separate tax ID number. It's a separate persona. So how does that persona have a voice? Corporate minutes. Corporate minutes document what the business has agreed to based on its directors, advisors, and officers. Who is that? You, as the owner. So you need to have minutes for the corporation to give it a voice. Because if you get audited, or you go into a lawsuit, or you want to sell your business, how does those entities, the regulatory bodies, the IRS, the courts, and or a purchaser of your business, know what decisions the business had made? The corporate minutes state it. Here's the problem. When I talk to all the business owners that we talk to, we ask, how often do you update your corporate minutes? We get a blank stare. What do you mean? Oh, or we get this. Oh, we don't do that. I don't think we've ever done. We may have done the first one that came with the corporate. I don't know. Or some will go, oh, we get together with an attorney once a year. Oh, okay. So you get together with an attorney and you do corporate minutes for the entire year? Or just that annual meeting? Oh, no, it's just usually the annual meeting. Okay, so what decisions have you made? Have you made decisions to finance vehicles or machinery or equipment? Have you made decisions on lines of credit? Have you made decisions on hiring people? Okay. Have you made decisions on payroll? What kind of benefits, health insurance? Have you made a decision on a bookkeeper? Have you made a decision on what you're going to locate your business at? Rent. Are you going to buy or rent a location? Okay. If so, who made that decision? Who has the authority to make that decision? These are all actions that your corporation needs to dictate. Now, your corporation is going to say, oh, my owner, Jane Smith, has the right and the authority to get lines of credit. Great. Your corporation gave you, the officer, the authority to make those decisions. Here's why this is so important. If you do not have that, then you have pierced your own corporate veil, and the IRS is going to consider you running your business as your own bank account. Therefore, all your income and tax benefits have null and void, and all of your revenue and income will be considered sole proprietor, self-employment income. The IRS has the right to reclassify your compensation if they deem necessary. Well, you just deemed it necessary by not holding up your end of the bargain by doing corporate minutes. Now, here's the gap. This is not your CPA and tax professional's responsibility. They're doing the financial. Whose responsibility is for the corporate minutes? Well, how many of you have an attorney on retainer? Most don't. Why? Because they're expensive. What do I need an attorney for? Oh, I'll do my own corporate minutes. Yeah, you did. Maybe you've done the first one, but how often? You need to have corporate minutes. We are going to provide, we've put together a program to where we provide your own assistant to do corporate minutes with you. They'll interview and talk to you about decisions and things that you have done, and they'll write up the minutes for you, give them to you, you review them, you sign them, you put them in your corporate book. You've documented, you've given your business entity a voice, you've separated your personal and corporate liability. You did not pierce your own corporate veil. Therefore, your financial statements, your tax benefits are also legitimate now because your corporation gave you the authority as the owner to do that. To hire a bookkeeper, to hire a CPA, to file taxes. Sounds basic, but very important. Imagine if you got all of your compensation reclassified as sole proprietor or self-employment taxes, and they did that for the last, let's say, just 3 years. And they charge you penalties and interest for the last 3 years until that tax liability gets paid. That could be expensive, couldn't it? Absolutely. Absolutely. Our business protection program that we've established gives you the ability to have your minutes assistant, to be compliant, to be proactive, as well as a report to justify or to explain what your compensation is. And we recommend every business entity do a compensation report, whether you're a C Corp, an S Corp, or an LLC or partnership. We always recommend everyone to have some sort of report, okay, of justification. It just shows that you're taking this serious. And think about all those audits that the IRS agents go on that people don't have their documentation. Imagine if you gave over a corporate book with all your minutes, you gave your financial statements, you gave your compensation report, you were organized, handed it to the IRS audit agent. How long of an audit do you think they're going to take? You think it's going to go pretty swiftly? You're showing that you're taking this serious. Okay? You think they're really going to spend more time going through all your documentation, trying to find any loopholes, or do you think they're going to go on to the next guy who's not as organized? That's common sense. Now, when I look at this chart, what happens here is that as you go through this chart, and what's interesting about this is as you go through this chart, I want to make sure, look at this. Look at all this data. This is all from the IRS, okay? This is important data. All of it, all comes from the IRS. This is 2020 report. They track everything. Everything. How many people call in? How many people use websites? See right here. Number of visits. Number of downloads. They track everything. They're responsible to. They have to. Why? Because they're reporting to who? They're doing the financial auditing of the United States government, right? Of Congress. That's the requirement to. Look at all this. All this data. Interesting. All this information. So do you think if they take all this information that it's important? This is what's really important here. Examination coverage and recommended additional tax after examination. They report, let me increase the size on this. They report to the IRS based on income levels. Individual income tax totals. Look at this. 1%, look at that. 0.1% percentage covered. 0.1%. Corporate income tax returns, C corporations, except 1120S. So this is just C corporations, 1120C. Okay. S corporation returns, 1%. So out of 4.8 million, let's see, let's look at this top here, closed or in process. Okay. So out of 4.8 million, they have 503 closed. Wouldn't you like to be one of these? Or 2,600, almost 2,700 in process. That equals 1%. 165 of those represented what? Number of returns examined with no change. Recommendation additional tax in the thousands. Okay, so let's go back down here to NA, not applicable. So 165 of these, no change. Okay, they're still in process trying to figure out not applicable right now. It's a different reporting. Okay, so what happens if this bumps up to 0.01, or this is 0.1% right now? What if this ends up being 1%, a full percent, 2%, 5%? What's that on 4.8 million? That's quite a bit of returns, right? So $80 billion from Biden is going to go to the current administration, is going to go to the IRS to hire audit teams specifically looking at S corporations and pass-throughs because of not taking reasonable compensation, because Social Security and Medicare are underfunded and you as a business owner aren't paying your quote-unquote fair share in their eyes. Please be proactive. Utilize our business protection program. Check out our videos talking about this in more detail. This is important. Hey, this video is a half hour. Absolutely. This is important. Your future relies on this. I'm not trying to do scare tactics. This is reality. Read between the lines. Who's talking about being proactive like this? Nobody. There's a gap in the advisory business, and the gap is corporate minutes, your compensation report, why you're paying yourself. Check out our business protection program. We also have a special treat in there for those that check it out, a special deduction that the majority of business owners don't understand or know that's around, that's been around since the mid-70s. Okay, so check it out. There's going to be a link in the description. I highly recommend you taking the time, investing in checking that out. Okay, so I appreciate your time. I hopefully there's going to be action from you. Okay, I'm a direct person. You need this that you work really hard. I want you to protect yourself. I want you to be proactive and compliant. Right? I'm a business owner as well, and we need to stick together in this environment that's happening. Okay, and the only way we can do that is show proof and productivity and proactiveness that we're doing things the right way, in the way that we said we would. And right now we are not, and that's our responsibility. That's okay. We're business owners. We take responsibility all day long. Okay, let's just take this little extra step so all your hard work doesn't become a big old tax bill. My name is Robert Wolf. I'm with Terra Firma Business and Financial Consultants. I'm an asset coach and a tax strategist. And please, if you have any questions, feel free to add comments down here. Reach out to us directly. If you like what you see here, hit the subscribe button with the little bell. Give us a thumbs up. Anything. We want to be able to know that you're listening and that we can help you and that we're there helping you. All right. Thanks so much. Have a great day.